how to find the direction of the market. This is something that I got asked a lot of times, so it is exactly what I will be speaking about in this video. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily, so I suggest you subscribe to the channel to not miss out on all the free analysis and education that I publish, and I will see you in the video. Okay, so how you're supposed to be finding the direction of the market? This is a question that I get asked a lot. That is exactly what we will be speaking about in this video. Now, first of all, is the direction of the market something that you can determine always? Okay, something that once you have the tools to actually determine, you will absolutely 100% always be sure that you actually determined the direction in the proper way, so that you will be right, that the direction that you have actually chose to trade in the market is actually the right one. Obviously not, right? It's a game of probabilities and a game of risk to reward. And that is why you have to find the best probability direction of the market and trade in that direction, therefore bringing your win rate more than 50% with a high risk to reward, so 1 to 3 minimum. If you are able to position yourself with at least a 1 to 3 risk to reward in the market, then even if you're right only 30% of the time, you're still making money, because 3 times 3 is 9 minus 7 is 2. So even if you win only 3 times out of 10 with a 1 to 3 risk to reward, you're still making money. So if you're able to have more than 50% win rate by positioning yourself in the most probable direction of the market, you will always make a lot of money in the long term in the market, because you will have a very good win rate with a very good risk to reward, and that is all you really need in the market to be successful. So to show you how you're supposed to be determining the direction of the market, I will perform a full multi-timeframe analysis on USD CAD, stressing as much as possible what you're supposed to be looking at when it comes to the direction of the market. So checking what we have on the different time frames, checking what we have from an order flow perspective to understand what the big banks and institutions are doing on USD CAD, and I will also show you by the end of the video what kind of opportunity we can be looking at on USD CAD as we are speaking. So let's get straight into it. Okay, so let's start our analysis from the monthly time frame of USD CAD. Now, why do you check the monthly time frame in the first place? To get a broader view of what you actually have on higher time frames. So you want to understand what is going on, what is the bigger picture on the pair. Now, keep in mind that the best time frames, okay, for determining the direction of the market are the monthly, weekly, and daily time frames. When it comes to the entry, the best time frame to find a high risk to reward opportunity on a specific pair is the 4-hour time frame. So this is what you have to find on the monthly, just a bigger picture, okay, what is going on in the long term. Now, what we can see here in the long term is that clearly the market has created this very strong impulse to the upside, followed by this retracement. Now, after this impulse and this retracement, where is the market actually finding some support? You see this wicks here. Why is the market stalling at this area? Because if you look, where is the last time that the market went to the downside before starting all this move to the upside? Is exactly here, right? So what does it mean? It means that this level here is actually the previous resistance, okay? It was resistance here, which is it now turned support at this area. So the previous resistance now turns to support is exactly here. So on the monthly, we have a market that has created an impulse, a correction, and is retesting support. So already from a broad perspective, what do I have? I have a market that I expect to make a move to the upside, okay? So I have good probabilities from the monthly time frame that the market will actually make a move to the upside. Perfect. Now that I have my informations from the monthly, let's go down on the weekly and see what we have on the weekly time frame. Now on the weekly, what is the situation? Now on the weekly, we can see that this level here, which is the level that we have already identified on the monthly time frame, is a strong level of support also on the weekly, meaning there was a strong structure level also on the weekly, which was acting as resistance here. In fact, there was resistance here, again resistance here, again resistance here, again resistance here, broke to the upside, retested it with this wick. Now that the market is coming from above, this previous resistance is now very strong support here. In fact, the market rejected it to the upside here, and now the market is testing the zone again. So perfect. On the monthly, we have bullish structure. On the weekly, we have bullish structure. Both the directional time frames are showing the same view. What we can also see from a weekly perspective is that we have also a bullish pattern. Why? Because in creating this move to the downside, what the market did, impulse, correction, tried to go lower, went a little bit higher, and then started the move to the downside. Therefore, what the market created here is in M formation. In M formation, that is in the completion zone, which is the support that we have from the monthly and weekly. So an M formation that has approached a very strong support area. Now, in general, after an M formation, you want to see the market make a move back to the neckline, aka the previous support, now turned resistance here. So basically, from here, you definitely want to see the market make a move to the upside to test the zone. So perfect. On the monthly, we have strong support. On the weekly, we have strong support and a bullish pattern. Let's go down on the last directional time frame, which is the daily time frame, and see what we have on it. And then let's check what we have from an order flow perspective. Going down on the daily, what we can see. Now, from a daily perspective, it's pretty clear that this move to the downside was very much expected. In fact, if you remember in our previous analysis on the pair on TradingView, what did we say? We said that we definitely wanted to see the market make the move to the downside and create this this regular head and shoulders for this impulse to the downside. And that is exactly what the market has done. And what the market has also done is broke below an incredibly strong level of daily structure, which was structure support here, again support here, again support here, again support here. You can see how precisely the market was respecting this area. And now the market broke the zone to the downside. And what do you expect? You expect the market to go for a retest of this level because there is a lot of liquidity to be grabbed at this level. But this level is exactly the neckline that we have on the weekly. Therefore, on the monthly, bullish pattern because we have the impulse, the correction. We expect the market at least to try to create the continuation to the upside. So we have the impulse and correction and bullish structure on the monthly. On the weekly, we have bullish structure with support and a bullish pattern, which is the M formation. On the daily, we have extremely strong structure that has been broken to the downside, and we expect the market to go and retest it. And as you can see from our technical directional analysis, what we have understood is that the higher probabilities are to the upside rather than the downside. But is this enough to say that 100% the market will go up? Obviously not. Trading is reactive, not predictive. Now, before I show you how we will be approaching this pair with students for this move to the upside on the 4-hour time frame, let's go and see what we also have from a COT perspective, so commitment of traders. What the biggest banks and institutions are currently doing on the USD CAD. How are they positioned so that we can gain an advantage over our competition in the market, understand where we really have the best probabilities to try to trade alongside the biggest speculators in the market, which are the hedge funds. Now, first of all, if we want informations on USD CAD, we have to check the CAD. Well, we have to check the CAD because all currencies on the spot are traded against the USD. Therefore, if you're checking the data for the CAD, what you're actually checking is CAD USD. But since we want informations on USD CAD, what we simply have to do is reverse everything, okay? So what we can see here is that we went from a situation where we had 38K net positions with way more longs than shorts, with 74K long positions from an institutional perspective and 36K shorts, to a situation where we now have way more shorts than longs, so completely the opposite, with minus 35K net positions, 58K shorts and 23K longs from an institutional perspective. And this is what has been basically happening in the long term. And why has this been happening? Because obviously CAD is correlated with oil, which during the crisis has been moving to the downside. And now in the short term, what we can see that the demand for oil has started again. Net positions have been increasing on the CAD USD, and longs have been open. In fact, we went from 19K long positions all the way up to 34K long positions. Shorts more or less remain the same. So longs are being added in the short term on CAD USD, meaning that shorts have been actually added on USD CAD. In fact, USD CAD has been making the move to the downside because institutions have been selling it. However, in the long term, the shift has been pretty clear. We still have more shorts than longs on CAD USD, meaning that we have more longs than shorts on USD CAD. So can we expect at least the completion of the weekly M formation? Yes. Now, here is how we will be approaching this situation with students. Now, if we go and check what we currently have on the 4-hour time frame, what do we see? Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, on the 4-hour time frame, what we can see is that clearly we have a market that is still below 4-hour structure, okay? At the moment, from a 4-hour perspective, the market can still easily continue to the downside. Everything from a directional perspective on the 4-hour time frame is still bearish. Therefore, we cannot be looking for any longs on the pair yet. But that is what we were speaking about at the beginning of the video. Okay, trading is reactive, not predictive. The way in which you can put as many odds in your favor as possible is to check the direction on the monthly, weekly, and daily. Go and see what we have from an order flow perspective, and then not just take the trade without waiting for confirmations. You have to wait for the proper confirmations on the 4-hour time frame. And by stacking all these odds in your favor, you will be sure that you can have more than 50% win rate with at least a 1 to 3 risk to reward. So that is exactly what we will be doing with students. We won't just take the long from here. We will wait for all our rules of our rule-based strategy to be satisfied on this pair. So we will be basically monitoring price action on the 4-hour time frame all inside of this area, okay? Even if the market from here will continue lower, that will be even better. Why? Because if the market from here will continue lower, then basically when on the 4-hour time frame we will see all our confirmations, we will have a better risk reward to the upside, because there will be more pips to be made if from here the market will continue lower. So with students, we will be monitoring price action all inside of this area, which is also the demand area on the monthly, weekly, and daily, and we will be waiting for the market on the 4-hour time frame to shift from a bearish market to a bullish market. And as soon as the market will shift from a bearish to a bullish market, we will be taking a nice long with a very good risk to reward, and at that point very good probabilities for the move to the upside and completion of the pattern at the neckline of the weekly M formation, which is also the structure on the daily. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, you find linked in the description the complete mentorship program that I have. So the way in which the program is structured is that first you learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, and I will see you in the next video.